To see how far GameStop Corporation has outrun anyone's ability to render sensible analysis, consider what its dizzying rally has done to Wall Street's best guesses of its value. It's happening in a stock that before 2020 had fallen 6 straight years as earnings shrunk, and which isn't projected to turn a profit before fiscal 2023. While fundamentals may one day matter again, for now GameStop has become the latest and greatest show of force by newbie day traders in a market that seems more like their plaything each day. It doesn't make business sense, said Doug Clinton, co-founder of Loup Ventures. It makes sense from an investor psychology standpoint. I think there's a tendency, where there is heavy retail interest for those types of traders, to think about stocks differently than institutional investors in terms of what they're willing to pay right now. They're willing to pay 583% more than what analysts consider reasonable, on average, while perhaps fairly priced relative to its annual sales of about $5.2 billion in the 12 months through October. Those sales are down 40% in just 2 years. The company is expected to report a per-share loss in both fiscal 2021 and 2022. To get a price-earnings multiple, it's necessary to look 2 years into the future, where the PE is around 58. The stock surged as high as $115.97 in Monday trading, at one point triggering a trading halt. It traded at $112.12 as of 10:23 a.m. in New York. While Wall Street may have no clue what GameStop shares are worth, it does have ideas on what the company should do with them. Sell GameStop can issue equity and should sell stock to pay down debt, said Wedbush Securities Incorporated analyst Michael Pachter, who had a price target of $16 for GameStop as of Jan. 11. Doing so would involve minimal dilution at these levels and provide protection against an economic downturn. They should do as much as the market will absorb, he said separately. Telsey Advisory Group analyst Joseph Feldman downgraded the stock to underperform from outperform on Monday, removing GameStop's only buyer equivalent recommendation. Whatever the future holds, the recent past has been a bonanza for anyone who dared own the stock, or, even better, bullish options. Calls expiring January 29 with a strike price of $115 were the most traded GameStop contract early Monday. Other similar wagers had correspondingly heady gains as contracts once seen as long-shot upward bets suddenly were in the money at investment research firm Hedgeye. Analysts advised clients to not go short the stock, despite removing it from their best idea long list to reanalyze fundamentals. Wouldn't dare do that given the positive catalysts we think will be coming down the pike as the year progresses, with a very bullish calendar on the horizon. Brian McGough and Jeremy McLean wrote GameStop has become a cult stock because of Ryan Cohen's success with Chewy, Wedbush's Pachter said, referring to the activist investor and co-founder of online pet retailer Chewy Incorporated, who joined the company's board this month. I cannot discount Mr. Cohen's past successes and don't know what he has in mind going forward, but I need to see their strategy before I give them credit for materially higher earnings power.